Uniswap. And this is a good one. This is a big story about DeFi governance and the wilds of DeFi governance. Now, a little bit of backstory before I toss it to the guests on our show. The backstory here is that Uniswap is looking to deploy a version of itself on the BNB chain, right? And associated with that, they need to bridge some aspects of those contracts over to that chain. There's proposals for various bridging solutions to be involved in this. And as such, some of the big backers of these various solutions are coming out, voting to sort of favor their own horse in this race. And it's getting a little bit ugly. So everybody's talking about this one over in Uniswap DeFi governance land. Lots of good stuff to dig into here. I saw Wendy wanting to go in on this one, so I will toss it straight to her. Wendy, what are your thoughts?
So I think that this is super cool that we're actually seeing DeFi governance come into play. But another thing about it I don't like is we're talking about a very large VC firm that spends a lot of money in the industry. So is it really good that they are kind of giving their input? The next thing that I do want to add is that I like Binance Smart Chain and BNB Chain because it's affordable to use, but there's so many problems over there because that network doesn't seem as secure as some of the other solutions and products that we already have. So I'm kind of glad that they are not going to be deploying that on BNB Chain just for that reason. I know that might be a hot take, but I want to get Will's opinion because he was nodding his head and we see a window in the background. Will, what's going on? You're not confined anymore?
Yeah, I'm not in prison anymore. Yeah, I got out of the cell after a few months, which was nice. Then Zach, there was a really great opportunity for you to make a little pun there as unicorn in the race, right? And that's the whole issue here with A16z, Jump Crypto, all these firms. They want to have their own implementation of Uniswap. They want to govern the Uniswap protocol how they want it to be seen. And that includes bridging to different networks. This idea of multi-chain thesis really has come into play over the last few years. It hasn't been as strong as many people want it to be, but there have been a few chains that have had some lasting impact, including BNB. Uniswap is probably the most important protocol built on top of Ethereum itself, or most important dApp, I should say. And so wherever that dApp is going to go has importance, right? And just like you mentioned, if Uniswap is going to go to another chain, then you have to add some different functionalities to that other chain. And so you have to have a little disagreement, or you have to have an argument about it and figure out how you want to have that deployed. And we see here that A16z, Jump Crypto, some others like Robot Ventures, they're all sort of figuring out how to do this in a decentralized way using the Uniswap token. Go back to 2020, the Uni token basically was launched out of this idea that they needed to crush other competitors to the Uniswap exchange. He launched this Uni token. A few years later, it's sort of a problem, right? Where some people have too much Uni, some people don't have enough. Is this really the best way to launch a new application on chain, is just by voting with Uni token? I don't quite know. One thing to note here is that both these guys have different reasons for wanting Uniswap to be on different chains or not different chains. And that's really because of the bridging aspect. Bridges allow you to move from one chain to another, and they're gatekeep at this point. We don't really have good decentralized bridging technology right now. So whoever is controlling the bridge from one chain to another stands to gain probably a decent amount of money, or at least an understanding of where that money is going to go, and then be able to trade based on top of that. So that's what they're really trying to get to the bottom of here. I think Jump Crypto and A16z have different bets on who's going to win the bridging game, and that's why they're really voting very heavy in this debate. I'm going to throw it to Chris really quick and then throw it back up to Zach.
Yeah. Okay. So there were two things that kind of came to mind for me. First off is last year, almost like to the day, Wormhole had a massive exploit. And that is a problem that I think has to be addressed in the general scheme of things when it comes to bridges. Bridges are notoriously, I think, subject to attack. Every other week we're hearing about this and that other bridge having some sort of massive attack. And when I heard Wormhole in the story, my brain immediately went to last year's big attack, where they lost a ton of money. And I mean, sure, that helps for security. Now, there are two sides also from a tech perspective when it comes to open sourcing technology. On one hand, it gives developers a really awesome chance to look at what they're doing, suggest improvements and all. But there is also the other side of things where with an open source, when you open source everything, it also reveals possible exploit attack vectors. And that is something that has always been a bone of contention, especially among security-related products like wallets, for example, hardware wallets, software wallets. Some of them just are really, really antsy about open sourcing their software in a big way, because there are security concerns, trade-offs associated with open sourcing. And when it comes to bridges and their, I think, innate vulnerabilities right now, that sounds like a pretty bold move. I understand where they're coming from, and I understand the need for open sourcing, and in many cases, rah. But in this case, I kind of went, okay, good luck with that. Let's see how long it takes to have another wormhole exploit. But that was just my, first take on it.
Yeah, so worth mentioning, I think it's like Wormhole versus Layer 0 are kind of the two big bridging solutions that are being proposed here, and each have their major backers, right? I think A16z is sort of in the Layer 0 camp, with Jump being a primary backer of Wormhole. And you mentioned sort of that big famous Wormhole exploit that took place about a year ago. That's certainly a big part of this. I think this is not a decided process, right? And I think the crazy thing about DeFi governance is that you get to see these things play out in real time with stakeholders in these ecosystems putting up their large holdings in these governance tokens to dictate the future of what happens. And I think what people are seeing here unfold is, potentially some degree of, if you look at like sort of the map of like the token holdings that are involved here, you have a giant token holding from A16z, but you also have some fairly substantial token holdings from other people who are interested in the future of this protocol and how it's going to exist on BNB Chain and with what bridge, right? So it is really fascinating to watch these sort of shareholder votes. And I say that with a little bit of caution, knowing that securities lawyers are probably tuned into this part. But you're essentially watching shareholder votes in a big protocol take place in real time. And you get to watch these various potential conflicts of interest emerge around some of these voting blocks, right? Because all these tokens are also liquid, and the price of these tokens are often influenced by whatever decision is the ultimate outcome. So it is this sort of really fascinating, I think, new sort of corporate governance that we get to see unfold in real time that leads to strong feelings, big tension, and big stakes on the line. I'm just going to toss this quickly to Will for his last thoughts before we change gears. What do you think?
Yeah, last thought on this before I actually take the next story is that we've tried this before in crypto history. So this is not a new thing. It's not new to DeFi by any means, and it's really not new to crypto. Going back to early Bitcoin days, a lot of the decisions on how Bitcoin would change was based on flags. So a node could say that I want to change to this protocol, or I don't want to change to this soft fork. Miners would be involved with that as well. It's still basically how they do that. We've seen a lot of different protocols in the past try to do this, including Ethereum with some carbon voting ideas. A lot of these things just end up failing at some point. They just don't really work. So it's interesting to see that DeFi continues to pursue this. And right now, you're kind of seeing why it hasn't worked out in the past, right? Big blocks have big voting influences, and they basically can kind of determine where the money is going to go. That doesn't make a lot of people happy.